Matt the Mortgage Guy here, recording a quick video to talk to you about buying a vacation home. Sometimes called a second home, sometimes called a secondary home, but for all intents and purposes, a vacation home. I'm going to talk about the pros, the cons, the things you should know, the things you might not know, things to consider, potential downfalls, and whatnot, but all of that coming up next in this quick little video I make. Before I get into it, please, if you like straightforward mortgage, real estate, personal finance advice, go ahead and smash the like button for the YouTube algorithm. Consider subscribing, even click that little bell that whenever a video comes out from me, which is every Monday, Wednesday, and Friday, you'll be notified. Okay, without further ado, we'll get into it. Second homes is something that's fairly popular all over the place. I live in Northern California, and for me and my client base, there's plenty of vacation spots, either over on the coast or up in the mountains, depending on if you're going west or you're going east from Sacramento, California, where I live. And so secondary homes is something that's I'm quite familiar with, and the mortgage guidelines around them are a little bit different. There's some really good stuff about them. And so I just wanted to go over just the general things with second homes. So a second home is not your primary. It's also not an investment property. It's considered a second home, right? Here's some of the pros or some of the cool things about second homes. When you're buying an investment property, you've got to put 20% down. A lot of cases you want to put 25% down to get decent terms. For a second home, you can put as little as 10% down. With 10% down, you're going to pay a little bit of mortgage insurance, but the second point I made was great pricing. As you may or may not know, you've got your owner-occupied house, then you've got investment properties. Owner-occupied, the rates are a lot lower than an investment property purchase. And so that's one of the things where, you want to get the lowest rate, the best terms possible, obviously when you're doing anything, and the owner-occupied property provides the best terms. Second homes are, the terms are almost identical as a primary residence. So you're gonna get that super low interest rate, and you can do it with only 10% down. Another positive is that a lot of places, for instance, if you live in Sacramento and you buy a vacation home in Lake Tahoe, you can use that vacation home 3, 4, 6, 8 weeks per year, and the rest of the time Airbnb it. In a lot of cases, I know a lot of people, a lot of clients of mine, that the Airbnb income they get minus all their expenses more than pays their 12 months of mortgage expenses, and then they just get to stay there for free. So there's some of the pros. Let's work over here. Some of the things that, not necessarily cons, but things you need to consider. That location matters. And I put getaway area here. It's got to make sense. You can't have a house in one city and then want to buy a house the next city over and just say, oh yeah, this is my second home, when it's really going to be investment property. You don't want to do that. That's occupancy fraud. So if you're buying it up in the mountains, if you're buying it in Tahoe, it's a getaway. If it's Santa Cruz, if it's Monterey, somewhere on the coast, that makes sense as a secondary home. So location matters. The underwriter's going to ask. Keep that in mind. Reserves. Reserve funds means that besides the 10% down or whatever you put down, they're going to want to see a couple months of mortgage payments sitting in your bank. And they're underwriting this thing, you're qualifying for your primary plus the secondary home. They're going to take into account, they want you to have a little bit of cushion, which is a good thing. That's never a bad thing. And qualifying, I just wanted to note this here, you're probably going to have rental income from it. A lot of people rent out their second home a number of weeks per year. Lenders aren't going to allow you to use that rental income in most cases. So know that you're going to have to qualify for this mortgage. And other videos I've talked about it, but I'll go through it real quick. You've got your primary mortgage, you've got the second home, maybe you have a car payment, and then you've got a few other small debts. Your income versus all these debts, you've got to qualify for it. Sometimes, based on your income again, qualifying for another mortgage on top of the one you already have is difficult. So keep that in mind. Any questions at all, please feel free to reach out. Second home is something that's really exciting and cool for some people. Another point I'll bring up, because I've done it quite a bit, is that If you are looking for a second home and you don't know where to get this 10% down, what a lot of people do is do a cash out refinance from their primary. Use that money to put down on their second home, their secondary home, vacation home, whatever you want to call it. Now I know people are gonna be typing, oh my gosh, that's so risky, pulling money out of your primary. If you're, don't want to be that risky, or you feel like that's a risky thing to do, you don't have to do it, but it's an option. And some people, with as much equity as they have in their primary, they've got hundreds of thousands in equity, and they pulled out 80,000 with a cash out refi, it wouldn't put them in that risky of a situation. So something to consider. Any questions at all, please feel free to reach out. Matt@mattthemortgageguy.com. If you're in California, I'm happy to help. If you're outside of California, I'd love to give you a referral to an out-of-state lender who I know, like, and trust. So that's it. Thanks for watching. I appreciate you. Bye-bye.